Welcome to Business Talk, presented in collaboration with the University of Rio Grande and the Ohio State University South Centers, from the heart of southeastern Ohio at the University of Rio Grande TV studio. Our goals are simple: promote the University of Rio Grande and the Ohio State University South Centers, as well as advocate local small business and their support organizations. More importantly, promote southeastern Ohio as a wonderful place to live, explore, and learn. There are many different ways you can find us. The University of Rio Grande Cable Access Channel 17, live online at blogtalkradio.com, and on YouTube if you are unable to catch our show live. Introducing our co-hosts, Jason Winters, Mike Thompson, Patrick Dingle. Thank you for tuning in. We hope you enjoy the show.
Hey, welcome back to our show. It's indeed a pleasure to have a number of guests today that really give a really good viewpoint of both education and small business. Jason is taking care of some family situations, so he is away from the desk, if you want to call it that. And today we're going to be talking about something that really comes to of great heart for myself. Having been a small business development counselor for a number of years, I have found that many times when individuals want to start the process of owning and running a business, that lending and financial kinds of responsibilities are so important for them to understand. And it's with great pleasure that we have Patrick Tackett. He's with the Ohio Valley Bank. He's the Vice President of Commercial Lending. And Pat's going to talk a little bit about some of the things that small business owners, either who are current or just starting out, should think about in approaching a bank and talking about lending needs. So, Patrick, I want to welcome you to our show. It's really good to have individuals that understand the banking world come on and share some of their levels of expertise. So welcome.
Thank you.
Let's tell the listening audience a little bit about your background and what led you to becoming a lending officer with the Ohio Valley Bank.
Okay. Well, Patrick, I've been in banking for 33 years. I actually began my career at Ohio Valley Bank, and that's where I am currently employed, as you mentioned. I started off as a co-op student with Gallipolis Academy High School, and was able to...
Before the turn of the century.
Yes, yeah. definitely. Was able to obtain employment at the bank during that time, and it's been a good working relationship ever since. So it's a great place to be.
And I understand your family grew up here in Gallipolis.
Yes.
And that you have one child that has made banking their initial career too.
Well, you say banking, but from all indicators, she's gone to the dark side. She's an assistant banking examiner with the OCC. So yeah,
I understand, and maybe we can touch upon the differences, because really both sides of the banking, they need individuals that are willing to extend loans, and then they need individuals to make sure that those loans are good.
Absolutely.
And so you come from two really good worlds then,
yes,
if you want to call it that. So let's talk a little bit about Ohio Valley Bank. It's my understanding Ohio Valley Bank has been in the community for many years.
Yep, since 1872, and we've got a proud tradition of providing the people in our communities that we serve with what we like to think is the best service they're going to get, and we do pride ourselves on that, and that along with offering a full range of financial services.
Well, I hope to look at some of the different ranges, but you have something unique there at the bank also, and that's working with the young adults regarding better understanding the monies. And some of those programs, let's face it, when we deal with students here at the University of Rio Grande, we're always encouraging students to understand budgets.
Right.
And I know that you probably have spent a lot of a lot of time with your children and understanding budgets.
I have. We have a lot of outreaches, if you will, through the bank. We do try to get ourselves into the schools at an elementary level as well as a high school level, and just tell them just show them the importance of good, sound financial management. So
yeah. And so, as a commercial lending, you were not always a commercial lender.
No, my background for many years was in the retail side of the bank. I began in collections, worked up through a retail lending position, was also involved in a lot of branch management and some back office retail lending operations. Most recently, within the last 2 years, I moved to commercial and really enjoy the challenges that's brought with it. So,
well, you mentioned retail and commercial, and now we're talking in the bank about the banking structure. And some of the listening audience don't necessarily understand that there's a retail side, and then there's the commercial side.
Right. Both of those present very different needs. I mean, from a retail perspective, you may be talking personal loans, house loans, mortgages, automobiles.
Credit
cards, personal accounts, and on the commercial side of things, you are dealing with a lot of small businesses and in general, and a lot of the products and services that go along with that. So it's a little totally different environment.
And then on the commercial end, that is where specifically you are dealing with small businesses, large businesses, and helping them with their financial needs.
Right. We certainly want to try to get as much information or get as much information out to all of our customers as we can. But one of the things we see so many times with our small business customers, specifically those who have never operated a business before, when they come in, a lot of times they're unprepared or just because of lack of experience, don't know what to expect or anticipate when they get into that. So there's a lot of things that we do as far as help them to get access to research, help them with resources. I think you and your background with the OSU South Centers have been very instrumental in helping. We've sent a lot of folks to South Centers for business plans and helping them develop those and things like that, so that when they do come back, they have their eyes wide open about what to expect, and in the way of how to manage it, how to prepare performance, what their costs and expenses, and all that's going to how that's going to work. So,
well, let's talk a little bit about business planning, because in a business plan, a lot of people have a lot of different views on what a business plan should be. I've seen some, and I'm quite sure you have seen some, 80, 90 pages of beautiful prose and interesting information and what they plan on doing and things of that nature. So is that that appropriate business plan?
Information is always, is always good if it's good information. I mean, so that sounds kind of crazy to say, but we've seen I've seen a lot of business plans that have, just like you say, multiple pages of information. What you can do with that's what is important. I mean, we're looking to see, is the business going to be a viable business in our market areas? Is it do the borrowers have a background that would be conducive for them being successful in that business? Do they have do they have the capital investment to get into it? Do they have the knowledge of how a business financially, how it operates? Just a lot of things that those are the things we want to see in that plan. We want that plan to read as a book that they can show us, here's what I want to do and here's why I can be successful at it.
Mm-hmm. So. And many individuals view the bank as having unlimited resources and money, and we know that that's not necessarily true. Right.
Yeah, we when it comes to the lending side of things, we certainly want to make sound loans that will definitely support and help expand our communities. We want those borrowers to be successful, so it's tough sometimes to look somebody in the face and say, hey, we don't feel this will work because of this or this, but when you do that, you've done that borrower a favor in many ways, because they have an opportunity then to go back and restructure that and improve on that plan. Or in lots of cases, they may say, well, that makes sense, and they may go a different direction entirely.
Sure.
So either way, we feel like that has helped help serve those in our community.
And sometimes getting in that counseling end, you as a lending institution are in business, and you are there to be safe stewards of individuals that come in and lend you money in the form of savings. And so you are required to make sure that the monies that you use are good investments.
Right.
On the same token, you have the federal agencies, the FDIC, and the some of the other regulatory businesses want to make sure that you are properly following the rules and regulations.
Right.
And many people don't understand that it's just not a matter of, hey, I need $20,000, and you're next thing you know, you're pulling out of your wallet and giving me.
There are a lot of pieces that go into making, specifically when you get in with commercial lending. There's so many moving parts to a lot of these deals that
that's true.
And you have to make sure that each part complements the other, and that it all at the end of the day is going to make for a good, solid, secure loan.
Sure.
And when we, as you mentioned, the regulatory agencies that regulate our banks, they expect us to follow sound practices. They expect us to follow policies and procedures that will ensure that we're making good credit decisions, and follow up on those credits after they're on the books to make sure that they're performing properly and that they've been monitored properly and things of that nature. So yeah, there is a lot more that goes into that, and so many times people see, they might think, well, maybe the bank didn't want to help me on this or something like that, and that certainly not the case. But as we go through those processes, we try to explain as best we can. One of the things we do is with our customers is we. After they provide us their tax information and all their financial information, we do a cash flow analysis, obviously, to see what the coverage is for that credit and for them as a whole. And one of the things I like to do is I like to be able to sit down with my customers and go over that form and show them here's what your current coverage level or your ability to service that debt is, and here's what it should be, or here's what it is, and all that thing, and then it's amazing how many times that I've had customers tell me nobody has ever sat down and showed me what you have to do on your end, and it brings a whole new understanding to that process.
Because most often than not, we had another commercial lender. He said that some people are always looking for grants, and when you don't pay your loan back to a bank, that's a grant.
Right.
But on the same token, individuals that do come to your bank sometimes are hoping that the bank will give them a positive direction. Should they do this or should they go there? And sometimes that can be a little bit of a problem, because next thing you know, you have those customers coming back and say, well, the bank told me to do this, then. And that's where the counseling services, Small Business Development Center comes in to help also with that process.
Right. Yeah, we try to as best we can represent the facts of what they've presented to us, and show that the deal itself is feasible and will cash flow and so forth, and you have to try to steer clear of your opinions of a business, other than
that's right,
and things like that, other than if you just you're not probably going to make too many snow cone stand loans in Alaska or something like that. I mean, it's things of that nature. You might but yeah, you try to share the facts with them, and then get out of their way and let them operate their business.
And I would venture to say, and you've heard this more often than not, we have many individuals. Hey, there's no business like this in this area, so everyone should be coming, and we have found them that there's a reason why there is not another business like that in the area.
Right.
Doesn't mean that it won't succeed. It just means, first of all, you have to have enough customers. What you're saying.
Exactly. One of the things that we look at and in determining what the the credit of our customers, or the strength of our customers, in pricing the loans, is we do run a pricing model. That pricing model that we use gives us a benchmark, if you will, on what we have to charge or should charge on that credit to make it not only profitable for us but affordable for our borrowers. Sure. We look at several things on that. We're looking at the financial strength of our borrower. We're going to look at their credit rating. We're going to look at those cash flows that we talked about earlier, and the collateral that they're offering up.
Well, let's talk a little bit about the collateral.
Sure.
What kind of collateral are you looking for?
It depends, and the reason I say that is a lot of it is driven by the term. A lot of it is driven by the type of loan itself. Typically, if you get anything beyond 5-6 years, you're gonna prefer to have something real estate related.
Sure.
I mean, you've got something with a lot more stability, if you will, and real estate has that, generally speaking.
You and I have both heard many individuals don't want to put their home up.
Right.
And that's rather interesting.
Right. Well, that's one of the common misconceptions. A lot of times you'll get a business a person that comes in to start a business, and you start gathering all that information, and you get into their personal financial statement, things of that nature, and they say, well, wait a minute, I'm buying this business, and I don't want to. Well, that misconception is that the business will stand good for itself, and so many times, and people don't realize, we will ask for, and typically do ask for personal guarantees.
Sure. And what does a personal guarantee mean?
Personal guarantee basically says that irregardless of what happens, you unconditionally guarantee repayment of that debt.
Even if you go bankrupt.
Even if you go bankrupt. I mean, of course, bankruptcy is a whole other issue.
I understand.
But if your business goes down the tube, personally, you're going to stand good for that debt.
Yeah.
And that's a lot of times when they think about that. You have to go through that process with them and explain to them why you would ask for that. And typically, if we look at it as somebody has a major ownership interest in that business, and what we consider that to be is somewhere north of 20% ownership, we're going to ask them to personally guarantee that debt, because they have a stake in it, as well as the bank would if we finance it. If they own other businesses, we may ask those other businesses to guarantee the loan they're coming in for now, basically because a lot of their cash flow may come from those other businesses. So anywhere that they derive revenue from, could be subject to,
understand,
to going into that. So,
and I think that is fair, because in our society, we can do anything we want. We can start any business. We can own anything. We can move around freely. I guess it gets into the fact that when we borrow somebody else's money, we do also have an obligation and a responsibility to make good with those debts too.
Right. One of the things you had mentioned, you talked about collateral a little bit. One of the things that another misconception, if you will, is how much their property's worth and the equity that they have in it.
Yeah.
A lot of times when they come in, they may have $1 million piece of property and they owe $500,000 on it, and they may think, well, I've got $500,000 in equity. Well, that's true from the standpoint of their owner's equity is $500,000, but banks leverage that collateral at a percentage, and if you're talking commercial real estate, that percentage is usually between 75 and 80%. So at 75%, if they had $1 million piece of property, $500,000 outstanding balance, they wouldn't have $500,000 in equity. They would have about $250,000 in equity, and that way the bank maintains a safe position in that if we take it as collateral. So
and that's partly because of the federal laws also.
Yes, it is. And but and those laws were enacted and are maintained for that reason, to make sure that your banks are sound and secure in their investments. So, but
well, that makes sense. Do you find a lot of people wanting a lot of money just for the loan, or should they also consider some kind of cash, extra cash?
As far as operating capital and things like that, you get that request with a lot of loan requests. When we first start meeting with an individual, we ask them to lay out their entire plan for us, and a lot of times we'll go back. If they don't ask for operating capital, a lot of times we'll go back to them and say, hey, you're getting started in this business. We see where you can you can take care of the purchase and you can take care of the equipment and you can do this, but do you have startup capital? Do you have, and there's a lot of times where we may be able to do things to help them with that in the way of a line of credit, or something along those lines to help them make sure they have operating capital until things pick up and take off. So, but those are, typically when somebody gets into a business, we do like to see either a good capital investment or help with collateralization to cover those balances. So.
That makes sense.
Yeah.
I know it's not fair because we only have 44,000 different vocations an individual can get in, and half of them would be small businesses. So just on a general basis, do individuals when they start the business, do they do a lot of right things, or are there some things that you as a commercial lender would wish they would do the first year?
I guess I would have to say that would be dependent on the lender's knowledge of that business.
Yeah, that's true.
Generally your business person is going to know more about the operation and function of that business than the bank is. We do look at obviously we're going to look at the numbers and make sure they're where they need to be and that they're moving the right direction.
Sure.
And that they're consistent. You don't want to see too many peaks and valleys in those income statements and balance sheets as they go along. You'd like to see steady growth. So if we see things that are out of the norm, we're looking at those statements each time they bring them in to see why that was. And if we see certain things that jump out at us, we may bring those to our customers' attention. Say, hey, we noticed this is a lot different than it was last year or last quarter, or whatever. And can you tell us a little bit about that? And sometimes through that communication, you discover things and it leads to changes within how they operate.
You brought up a good point, and that's one of the things that I like about Ohio Valley Bank and some of the other banking institutions is that they encourage the business owners to keep them informed of the record systems, and it sort of focuses, sometimes a new business owner, they're doing everything but the records.
Right. One of the things that we and I'm sure we're not unlike many other banks, at the time we approve those loans, they're approved with loan covenants, and part of those loan covenants are that they will provide upon request financial information in the way of personal financial statements, tax returns, rent rolls, balance sheets, income statements, and things of that. Depending on the business and type of business and size of business, those covenants, become more complicated and complex.
Yeah, sure.
But generally, at the very least, we're looking for annual financial statements and tax returns.
So I know we only have a few more minutes, but let's just suppose I have my business plan taken care of, and I come to you. Can you sort of help me to understand what the behind the scenes process, because most people, they go to the bank and they say, here's my package, where's my check?
Yeah, what we try to do is and we started out the program this way, we encourage as much research by our borrower into the venture they're going to get into or that they're currently into or want to get into as possible. So many times when they come to us, it's like you said, they say, hey, we're ready to do this, and we would like to, we'd like to go ahead and get our loan. Well, they're not always ready for that loan at that point, and so we do encourage them to research all the things out. That planning time that they use is crucial in making sure that they're going to be a success. Those additional resources that we spoke about earlier, just like the South Centers, if you will, and all those types of places that can help give them guidance, especially if they're inexperienced in operating a business. Some other things to take into consideration are, and so many times people don't do this, is accounting and legal representation. We strongly encourage anybody that is going to specifically start up a business to go seek out some legal counsel.
Yeah, I think that's a good idea.
And accounting work, because what type of business are you going to have? How are you going to set it up? Is it going to be an LLC, a corporation, a partnership? What that's going to look like. Plus, in order to get that business started and to borrow and things against it, you've got to have that paperwork in place. So
I tend to agree.
So yeah, that's all certainly all very important in the planning process.
Yeah, I think you hit upon something. I oftentimes have individuals asking me, should they get an LLC, a general partnership? And one of the things, just as you're pointing out, is I'm not an attorney, and so my opinion would not hold up in court. So I would encourage them to seek guidance from an attorney.
Yeah. And we certainly try to do that because, like you said, that's not our area of expertise. Right. And although we have knowledge about it, about those different entities and so forth,
that's true.
It's just they need to hear that from somebody that can make sure they get that business structured in the way that best suit them.
Okay.
Yeah.
Patrick, we only have a minute or so left. Are there some things that we would like to talk about? I want to put up your website address. You have a great website.
Great, thank you.
And if Luke can put that up there, you have a lot of information that's available. There's your phone number. How about the website? Oh, don't have that? It's www.ovbc.com. And if you want to look at that, you can get into a newsletter and things of that nature. But shortly, anything you want to add?
No, Patrick, really what I'd like to do is just thank you for having us on Business Talk today. And on behalf of Ohio Valley Bank, if there's a venture that you're currently in or one that you're interested in getting in, we would certainly like to have an opportunity to look at and speak to you about it. So. Sure.
Okay. All right. Sounds good. Patrick is the Vice President of Commercial Lending at the Ohio Valley Bank. He's always been interested in talking, as he said. I have found Ohio Valley Bank is more than willing to talk. They're interested in you being successful, because if you are successful, then they are successful. So again, Patrick, thank you very much for coming, and I hope you come back. We were going to get into your amusing stories and just ran out of time, so you'll have to come back and tell us our amusing stories. We have coming up, speaking about small businesses, once the businesses really get going and you have so much money you don't know what to do, at 2 o'clock we have, in addition to talking about your management wealth systems, we have Dwayne Adams. He's with the Adams Wealth Management business that's located in Piketon, Dayton, and in Portsmouth. Dwayne is very knowledgeable about different aspects of helping people invest their monies. And then at 3 o'clock we have Beth Zinn and Tom Sutton. They are with the University of Rio Grande Community College Network. They're going to speak about that. I'm Patrick.
And I'm Patrick.
Thank you for listening.